The most famous Bitcoin buyer on the planet has now gone 2 full weeks without buying a single coin. The document that proves it landed at the SEC this morning. It is mostly one table, and the line that matters is one character long. Bitcoin acquired this week. A dash. Nothing. And almost nobody is going to read it. Michael Saylor. The man who bought Bitcoin through every crash for 6 straight years. The man who tweeted, word for word, "You do not sell your Bitcoin." His company is sitting on 843,000 coins, more than any company on earth. And this month, the buying stopped, the selling started, and the dollars started piling up. Here's the part I need you to hear up front. Nobody outbid him. Nobody hacked him. Nothing happened to Bitcoin itself. What happened is that years ago, he bolted a machine onto his Bitcoin, a machine that eats dollars every quarter forever. And this summer, for the first time, the machine got hungry at the worst possible moment. And buried in one of these filings, there is a single sentence in a footnote that tells you who actually gives the orders at the most famous Bitcoin company in the world. It is not Michael Saylor. I am going to read you that sentence, word for word, in a few minutes, because it is the best argument for what this channel says every single week. I caught this filing the same morning it dropped, because checking one screen before the headlines is how I start every day. I will show you where that lives in a bit. Let me give you the timeline, straight from the documents, because the documents are cleaner than any headline. June 29th. Strategy. That is the company formerly called MicroStrategy, announces something with a name only a committee could love. The BTC Monetization Program. Authorization to sell up to $1.25 billion of Bitcoin to fund a dollar reserve. Understand what that means. Selling Bitcoin now has a program name at the most famous Bitcoin company on earth. When an institution gives a thing a name, that thing is now policy. That same week, they used it. 1,363 coins sold at an average of $59,256. Then, the first week of July, 2,225 more at 60,773. 3,588 coins, $216 million. Now hold that next to this number. His average cost is $75,476 a coin. It is printed in the same filing. He sold more than $15,000 a coin below what he paid. Nobody does that on purpose. That is what forced selling looks like in a government document with his own general counsel's signature at the bottom. Then the buying flatlined. The week of July 6th, 0 coins. The week of July 13th, 0 coins. The same footnote both weeks, and I am quoting, "No Bitcoin purchases were made this week." This from a machine that bought Bitcoin almost every single Monday for years. And here's what the money did instead. Last week, he sold $263.5 million of his own company's stock, and not $1 of it bought Bitcoin. It went into a cash pile the filings call the USD reserve. 3 weeks ago, that pile was $2.5 billion, then $3 billion. This morning, $3.225 billion. The most famous Bitcoin bull alive is stacking dollars. Now, before anyone in the comments beats me to it, 3,588 coins out of 843,000 is 0.4%. He is not liquidating. If you came here for Saylor dumps everything, that video is out there and it is not true. What actually happened matters more than a fire sale, because it tells you who is really in charge. So what forced him? To see it, you have to look at how he paid for all those coins. Strategy did not just buy Bitcoin with profits. It raised money by selling special shares, preferred stock, and I want you to hear the actual names on the actual stock exchange because you would think I was making this up, Strife, Stretch, Strike, Stride. Four of them. Two pay 10% a year, one pays 8, one floats. And these are not loans you pay off. They are perpetual. No end date. Think of an interest-only mortgage that never ends and can never be paid down. You do not own that house free and clear. You feed it forever. That is what he built around his Bitcoin. A fortress with a mortgage on it. And the mortgage is due in dollars, which is the one thing a pile of Bitcoin does not produce. So every quarter, forever, the machine has to manufacture dollars. There are exactly two ways. Sell more stock into the market, that is diluting the shareholders, and it works only while the market is buying. Or sell the Bitcoin. That is the whole menu. For years, the first option paid for everything, because the stock traded at a premium and money was cheap. Then Bitcoin fell by half, the premium collapsed, and the easy money dried up. The dividends did not care. Dividends never care. That is the point of them. By the way, that $65,000 Bitcoin price I keep referencing is live right now on my macro command center at timtalksfinance.com/members. Free account, same screen I check every morning before I believe anything a headline tells me. Which brings us to the sentence I promised you. July 6th filing. Footnote 1. Under the table showing the coins he sold. Word for word, proceeds from the Bitcoin sales were used to fund payment of distributions on preferred stock and to replenish the portion of the USD reserve used for this purpose. Read it again slowly. The Bitcoin was sold to pay the preferred dividends. There is your answer. Who forced the man who swore you never sell? The people he owes dividends to. Strife, Stretch, Strike, and Stride. On the org chart of the most famous Bitcoin company on Earth, the man with the 843,000 coins reports to the dividend. And now Larry Fink's line from last week lands differently. Remember what he told CNBC? The thing I covered in yesterday's video? He was always worried about the leverage in Bitcoin. Too many leveraged players. That is why we had the washout. Here is one of the biggest leveraged players in the entire market, caught by his own paperwork, selling the bottom because the machine was hungry. Fink did not predict that. He described it. It was already happening in the filings. Now zoom out, because this was never really a story about one man. Every wrapper answers to somebody. The ETF answers to an issuer with an administrator's key. That was yesterday's video, one sentence, go watch it. The miners answer to the power bill. Strategy answers to 4 preferred stocks with comic book names. Your bond fund answers to a board. Your bank answers to a regulator. Climb far enough up any chain of paper and you always find the same thing. Someone with the power to force a sale on the worst day of the decade, and it is never you. So ask the question this channel exists to ask. What does the coin itself answer to? 21 million. Fixed. Forever. A Bitcoin in your own custody pays no dividend, owes no dividend, reports to no board, and has no program named after selling it. It has no mouth to feed. It just sits there, unprintable and unforceable, which, this month, turned out to be the rarest property in the entire financial system. Rarer than Saylor's conviction, and his conviction was the strongest on Earth. One more thing the tape says. Those 3,588 coins did not evaporate. Somebody bought every one of them. The same quiet hands I showed you 2 videos ago that absorbed the worst ETF month in history. The coins keep moving in one direction, out of the wrappers, into hands nobody can call. Now the honest column, because credibility is the only product I sell. Saylor's company still holds more Bitcoin than any company on the planet, and the coins themselves did nothing wrong this month. The asset did not crack. The wrapper creaked. Those are different events, and most of the coverage cannot tell them apart. And this is not Saylor is a fraud. It is simpler and more useful than that. Leverage turns the strongest hands weak. If obligations can force the most convinced Bitcoin holder alive to sell $15,000 below his cost, they can force you. So hear me clearly, and this stays true no matter how good the price looks. Do not borrow money to buy Bitcoin. Not against your house, not against your portfolio, not on a card. The margin call always arrives on the worst day. That is not my opinion. That is this filing. And size it honestly. A slice small enough that a bad year never touches what you live on. There are no certainties here, only probabilities. I hand you mechanisms, not prophecies. So here is where it lands. Scenario 1. The recovery that started on CPI day holds. The stop premium comes back, the machine calms down, and the Monday purchases resume like nothing happened. Fine. The vow is still broken, and you still learned exactly what the wrapper does under pressure, in the 1 month it mattered. Scenario 2. This drags on, and that $1.25 billion monetization program starts getting used in size. The biggest corporate holder on Earth becomes a scheduled seller, and if June is any guide, every coin he is forced to sell walks straight into hands that have never sold anything. In both scenarios, notice, the coin is fine. It is only the claims on the coin that wobble. 3 signals, all free, all checkable. 1. Next Monday's filing. Another dash under Bitcoin acquired or a purchase. The dash is the story continuing. 2. The USD reserve line. If it starts growing from coin sales instead of stock sales, the treadmill just sped up. 3. Whether the ETF inflow streak that started on CPI day survives the week. That is the paper crowd voting with real money. One line to carry out of here. The man who said never sell just taught the whole market the real lesson. It was never about never selling. It is about owning the version of Bitcoin that nobody on earth can force out of your hands. If you want to see what the printing has already cost your savings, your number in dollars, the money quiz takes 2 minutes at timtalksfinance.com/members. Free, no credit card. Live Bitcoin and gold prices on the same screen I used to build this video. I will hand you the math and the mechanism. You make the call.